Everybody, and welcome to another episode on my channel. So we have a great episode for you this week. We will be doing a deep dive into one of my favorite businesses in the world and one of my favorite equity holdings in my YouTube dividend portfolio, and that is Costco. So Costco makes up about 4.24% of my YouTube dividend portfolio. It is a core holding, and over time, I would like to increase this position to around 6 or 7% as the stock valuation allows. So what we're going to be doing today is looking at the Costco company profile, looking at the types of different products that they sell. We'll be doing a deep dive into their financial statements. So we'll look at their statement of income, we'll look at the balance sheet, and we'll look at the statement of cash flows. Then we will do a trend analysis using Qualtron, looking at the financial metrics of Costco in a graphical representation. And then I will be concluding by stating what my plan is regarding Costco, whether I will buy some more or sell, or what my plan is over the next 10 to 15 years with my Costco position. So if you're interested in content like that, just a refresher here, if you haven't seen any of my videos, this is a no fluff channel. I do not sell any courses. I do not try to get you to subscribe to other products. My main goal here on this channel is to just give investors a brief snippet of the investing knowledge that I have gained over my investing career or my investing time horizon in the effort to hopefully help other investors on their investing journey. So if that's something that you're interested in listening to, I encourage you to like, I encourage you to subscribe. It doesn't cost you anything, and it just helps me keep motivated to keep producing content like this and hopefully help other investors on their journey. So that was a mouthful, but let's continue on. Let's go and look at Costco. So here we have Costco's website. So if you're unfamiliar with Costco, I don't know where you've been in your lifetime, so I'm assuming that people are familiar with it. But if not, Costco literally sells everything. They sell groceries, so that's your everyday grocery items, things such as banana, fruits, other grocery items, coffee. So they're just like a giant grocery store, but they're in a warehouse. They have a pharmacy, they have optical, they sell tires, they have a garage, photo services, literally anything you can think of Costco probably sells. So as you can see here, there's Costco travel, they sell Apple devices, Keurigs, massage chairs, they even have appliances here. So they are a seller of merchandise, and they compete very, very well in this category, and we will see why when we look at their financials. But as you can see, they basically sell everything. And if you're unfamiliar with them, I encourage you to do your research and go and look at the different products on their Costco website. But I believe that most people should be familiar with Costco. And if not, like I said, go and check out their website to see what products that they offer. So we're going to look at the company overview. And what I've done is I've just gone to the Costco wholesale investors page and clicked company profile. So if you're not familiar with Costco, please listen up, and then this will give you a great idea. Okay, so Costco Wholesale Corp operates an international chain of membership warehouses. They carry quality brand name merchandise at substantially lower prices that are found at a conventional wholesale or retail sources. So this is how Costco succeeds. They carry great items in these membership warehouses that they call them, or these wholesale warehouses, and they sell them at substantially lower prices. Therefore, they're able to sell more merchandise at lower prices to consumers. Now, the warehouses are designed to help medium to small size businesses reduce costs in purchasing for resale and for everyday business use. And then individuals may also purchase for their own personal needs. So again, Costco does sell these items at substantially lower prices. And how they are able to do this is they buy these items in bulk, and then they resell these to their members. So businesses go to them when they are reselling this merchandise because they buy it at a lower price and then mark it up and resell it at their business. And then individuals also buy products for their own personal household needs. So Costco warehouses, as they say, are one of the largest and most exclusive product category selections under a single roof. So again, these categories include groceries, candy, appliances, television, media, automotive supplies, tires, toys, hardware, sporting goods, jewelry, watches, cameras, books, housewares, apparel, health, beauty aids, furniture, office supplies, and office equipment, and much, much more. So basically, like I said, they are a seller of everything all within their warehouse. Now, they are known for carrying top quality national and regional brands with a 100% satisfaction guarantee. Now, this is very important. I myself, I'm a Costco member. So whenever I have a problem with a product, I can literally just walk in there with my receipt. They do not ask me any questions. They just take it back and they say, nope, yeah, we'll get it replaced for you, even if it's been years. My brother, for instance, he had a product that he had for a couple of years and he just had it sitting there. He never used it. He took it back. They took it back. No questions asked. They 100% want to guarantee the satisfaction of their members because they are the most important factor for driving their success, both financially and reputably. So we will look at that when we look at their financial statements, and you'll see why. So members can shop for their private label Kirkland signature products designed to be equal or better quality than the national brands, including juice, coffee, cookies, houseware, luggages, and detergent. So this Kirkland signature product, if you're not a customer of Costco or a member, again, so what Costco does is they basically own their own private label called Kirkland Signature, and they have these own products which they design for their members, and they often sell them at lower prices than the competitors. So just for instance here, let's look at laundry detergent. So you have laundry detergent that's usually by Gain or Tide. Costco, what they do is they'll make a Kirkland signature product that is of equal or better quality than those brands, and then they will sell those for a cheaper price. So that is also how they get a large portion of their profit and their revenue, by designing and selling products at a cheaper price than those national brands. Now, additionally, Costco has a different manufacturing business, specialty food, optical laboratories, meat processing, and jewelry distribution. These, again, are also all at their warehouses, and they're high-quality products with substantially lower prices. So we have some words here from their CEO and director, Craig Jelnick. So he says, Costco is able to offer lower prices and better values by eliminating virtually all the frills and costs historically associated with conventional wholesalers and retailers, including salespeople, fancy buildings, delivery, billing, and accounts receivable. They run a tight operation with extremely low overhead, which enables them to pass dramatic savings to their members. So right here, that paragraph basically, you can't really say it any better than that. Costco's business right here is summarized in these 3 lines. They do not have any salespeople, fancy buildings, delivery, billing, or AR. So what they do is, if you've never been in a Costco, it's literally a warehouse. Nothing is put on fancy shelves. It is just put in the pallets right there for people to buy. So there's no fancy buildings or any delivery or billings or even salespeople selling you this stuff. It's literally just put there, not on a shelf, just on a pallet, and you can grab it, put it into your cart, and then go to get rung up. By doing this, they have a lot of savings of their overhead. So overhead meaning those additional costs such as fancy shelves or trying to make the store look nice, all of these other things that other grocery stores and other places or other bulk sellers do, that they have to incur these high overhead costs. Costco doesn't do that. They just have giant warehouses where you can go in and pick it off the pallet, and then by doing that, by having lower overhead, they can pass on those savings by offering lower prices on those goods to their members. This is key because, for me, for instance, if I'm going in and I'm going to buy some laundry detergent, I don't care if it's on a fancy shelf. I don't need a salesperson coming up to me. I can just go and grab it off the pallet. I'd rather save that extra $2 on my bill instead of having a nice fancy shelf, which I look at for maybe 10 seconds. So that is basically Costco's business model in a couple of lines. So here we can see Costco is open only to members, and offers 3 types of membership: executive, business, and gold star. Executive members receive additional savings on Costco services such as home and auto, their auto program, check printing, identity protection, payment processing, and bottled water delivery. Executive members in the U.S. earn an additional annual 2% reward up to $1,000 on qualified Costco purchases. And then here we can see the other 2. So the business members, if you have a business, you then pay a $60 fee in the U.S., and then this fee includes 1 household card. And then if you're a Gold Star member, like myself here, pay a $60 annual fee to shop for personal use. So these memberships, even though it seems very, very small, these $60 fees, this is actually the key to Costco's success, this is the reason why they are one of my favorite holdings in the world. This membership fee is amazing. We will look at it when we look at their financials and you will see what I mean. So that was a look at Costco's overall company profile. If you want, you can pause, take a screenshot here. You can see their number of warehouses, around 860 as of August 24th. And these are the areas of operations here. Very highly concentrated in the United States and Canada. So it makes up the bulk, but they are growing very, very fast. And they open a bunch of warehouses every year, but they do it at a controlled pace because they are very disciplined with their capital allocation. So again, if you want to have a look at these, please take a pause or a screenshot, and then you are able to have a look at that. Now what we're going to do is go and dive right into the company financials. So what I've done is I pulled up the 10K or the 10Q here. That's Costco's regulatory filing of their financial statements. I will try not to get too fancy here. Let's just go and look at their financial statements. All right, so here we go. We've got the financial statements, and this is for the quarter ended as of May 7th, 2023. And what they do here on financial statements, if you're unaware, you haven't read them, I'll try to go as slow as I can. But here, what they do is they say the 12 weeks ended. So that's the quarter ended. 4 weeks in a month, you got 3 months. 4 times 3 is 12 weeks. And 36 weeks ended here. That is 3 quarters, or essentially 9 months of the year. So here we got May 7th, 2023. And what they do for comparables is they then put the comparable here for the prior year's quarter. So what they've done here is done the same quarter, just a year before. And then here, the same 9 months, but just the year before. So you've got the current and then the prior years. So what I love about this business is it's a $1 billion business, and they have a very simple income statement and a simple balance sheet. So what we can see here is the net sales. So the net sales of about 52 billion, and then the membership fees of about $1 billion. So the total revenue is about $53.6 billion. That is amazing. Now, when we look at that compared to the prior year's quarter, it's at about 52 billion. So not a huge amount of growth there, but that is still growth over time. Now, when we look at it for the 9 months from this year compared to the prior year, it's up pretty big. So it's up almost $9 billion at 163 billion of sales compared to 154 billion of sales in the prior year. Now, their operating expenses, so they are very massive because of these merchandise costs. So like Costco said, they try to get you the best price possible on the specific merchandise or items that you buy. So on net sales of 52 billion, about 47 billion of that is direct merchandise costs. And then if you add in the selling and general administrative costs, that's another 4 billion. So literally on that 53 billion of sales, they only end up with operating income of around 1.6 billion. So when you look at that from a margin perspective, that's not very high. But what you need to understand here is this is not what is really driving Costco's success. The sales are a huge aspect of the business, but it's these membership fees. So these membership fees of about $1 billion, they flow all the way down to the operating income. So that 1 billion is basically pure profit, and that makes up the largest portion of the operating income. So like I said before, those membership fees, that $60 fee that you pay annually, that is the key to Costco's success. So when they talk about that 100% satisfaction guarantee, that is why they want you to be satisfied. They want to retain your membership because they know that that membership is paramount to their financial success. So, and by doing so, you are satisfied because you're paying the lowest that you can while they're still gaining a very, very small margin. I think it's like 2 or 4%. We'll look at it when we look at the trend analysis, but it is very low. So they are just taking these membership fees and it's going straight to the bottom line. So Costco's membership fees here, just remember they are very key to their financial success. And when we look at it for the prior quarter, again, we can see the same story. And here for the other year to date, we can see the same story here. So that is Costco's membership fees, and that is why they are key to their success and their operating income. Now we can look at their income here. Now let's look at their net income at 1.3 billion compared to the almost 1.4 billion from the same quarter for the year before. But when you look at the year to date, they are up in terms of their net income to 4.1 billion compared to about 4 billion. So for the 36 weeks ended or the 9 months, they are still doing quite well. So that was the income statement. Now let's go and look at I believe it's the balance sheet here. Yeah, let's look at the balance sheet. So COSTCO's balance sheet again, excuse me. So here we can see the current quarter compared to the prior year's quarter for the same quarter. So that's just the current year and then the comparable here. So we can look at the cash and cash equivalents. They've got about 12 billion. Have some short-term investments. So short-term investments, those are liquid investments that they can cash in, and they basically have, I would essentially consider them as cash as well. So you've got about 13 billion in cash. They have some receivables here. They have merchandise inventories at 16 billion and other assets of $1 billion. Total current assets of about 34 billion. Now what you have here is some other assets. So current assets are essentially assets that you can get rid of or liquidate in about a year. Other assets are those long-term assets. So they have property, plant, and equipment at about 26 billion. Operating lease right of use assets. So this right here is an accounting recognition thing. So what happened is there was a standard that came out that needed to allow for required companies to recognize both an asset here and a liability here in terms of the leases for those warehouses, instead of just recording a rent payment, which would then hit the income statement and it would just been an expense. So this right here, even though it's listed as an asset and is also listed as a corresponding liability, in my opinion, that's just a presentation requirement or a difference. So I don't consider that a real asset or a real liability. So if we look at it, the total assets of about $66 billion. Now, what's really cool is looking at the current liabilities and the other liabilities, there's not a lot in here. So we have the AP, so 16 billion, and again, merchandise inventories of 16.3 billion. So again, this would just be purchases for the merchandise inventories. And then we have some accrued salary and benefits. We have some deferred member awards. And then what I really like to see here is the current portion of debt, 0. They do not have any debt due right now within the year. So that is awesome, considering they have about 13-ish billion of cash, sorry. And then when you look at the long-term debt, it's about 6.5 billion. So if they wanted to, they could just pay off that debt with this cash and they still have about 6 billion of cash left. So this is a cash positive company. That's awesome to see as an investment, meaning that the management has done a great job keeping the company unlevered and done a very prudent job of keeping the company in a cash positive position. That is a very disciplined capital allocation strategy from management, and I love to see that. So that was their balance sheet in a snippet. It's a great balance sheet in my opinion, very, very strong. Let's go and look at the cash flow statement. There we go. So COSTCO'S cash flow statement. So what they've done here is they've done it for the 9 months or the year to date. And again, this is the current year and this is the prior year. So here what you do, I'm going to try to explain a cash flow statement as well. But basically your net income pops up here for those 9 months. So about $4 billion. And then you have to make adjustments or add back non-cash items. So those are things such as depreciation and amortization of about 1.3 billion, non-cash lease expense. We have stock-based compensation here at about 643 million. So it's actually higher than I thought. So we'll have to have a look at that in a minute. You have the impairment of assets, any deferred income taxes. And then you have to have the changes in operating assets and liabilities. So these are the changes in the AP and the assets from the previous quarter or previous year. So we have about 1.596 in merchandise inventories, AP about 872 million, and then your net cash provided by your operating activities. So your operating is 7.3 billion. Now, also to remember is your cash flow is split between 3 different types of activities. That's operating activities. So that is, it's very easy to understand. It's cash flow from actually operating the business. Then you have the investing activities. So that is the cash flow from your investment activities. And then from financing activities such as borrowings or stock-based compensation or repurchases of stock and things like that. So we did looked at the operating activities. Now if we looked at the investing activities, they spent about $950 million on purchases of short-term investments. They had about $600 million of maturities of those short-term investments, and then they spent about $2.8 billion on adding to their property, plant, and equipment. Their net cash used in investing was about $3.1 billion. Now, if we scroll down, we can see their financing activities. I always like to look at the financing activities because it tells me whether a company is paying back their debt, or if they are issuing shares, or if they're buying back shares. So this is a very, very great section of the cash flow statement that I like to look at. Repayments of short-term borrowings. So they paid back about $700 million of short-term borrowings or debt. And they also received proceeds from those short-term borrowings of about the same amount, so they netted to nil. Repayment of those long-term borrowings here. So they repaid about $75 million of long-term borrowings. And then they had tax withholdings on stock-based rewards and repurchase of common stock. So here what we can see is they got about $446 million of repurchases of common stock. So what they did was they bought back $446 million worth of common stock, and they bought it and canceled it. So when they do that, they make you a larger equity shareholder in the company because they reduce the number of common shares outstanding in the market, which increases your percentage of ownership, which is awesome. But what we saw here was they also gave out $643 million of stock-based compensation to their employees and executives. So really, the total net here of the repurchases and the stock-based compensation, it does not really, amount to that much of a difference here. So that's something to keep in mind. Now, cash dividend payments are really great. And so they had about 799 million, or almost 800 million of cash dividend payments, which is awesome. It's a great increase from the prior year. And we'll look at the dividends when we look at the trend analysis as well. But and it's a great dividend growth company in my opinion, but we'll look at that in a little bit later. And here you can see the cash at the beginning of the year and then the cash at the end of the period, 12.4 through 93 billion, which matches the balance sheet that we looked at. So that was a quick look at those three financial statements. If you have any questions on those, please pop them in the comments and I'll try to address those questions as I can. I just thought I'd give you a brief overview of the cash flow statement, the balance sheet, and the income statement of Costco. Let's go and look at the trend analysis. It's going to be my favorite part. So here's my portfolio here. And when you look at my portfolio, you can see the gains and losses. I have a couple smaller positions in a loss, and then we have some great positions in a gain. And when I look at it, I previously thought Apple, Microsoft, those would be my largest gainers. We see Visa. Costco is my second largest gainer. It's at almost 25%. It is up huge for me since I bought in. And it's right behind JP Morgan at 29%. So Costco is my second largest gain as a percentage in my portfolio, and we're going to see why. Let's go and look at my holdings, and we're going to scroll down to Costco. All right, so Costco Corporation trades under the ticker COST on the NASDAQ exchange. Trades currently at a price of $534.01. And as we can see here, we're going to be looking at Costco in depth on the trend analysis. So Costco has a current market cap of $236 billion. Price to earnings ratio, so that's a valuation metric. That is the price of their stock price of the company divided by the earnings per share of the company. So here we can see it has a PE, or a price to earnings ratio, currently of 39. And then the forward price to earnings is 33. So it's on a PE ratio, in my opinion, it is very, very expensive, but we will see why it is expensive in a minute. Now, if you go down, you can see the dividend yield. It's not paying a huge dividend, 0.76. It's respectable, but still under 1%. So if you're looking to retire off dividend income, this probably is not the right stock for you or company for you, but it could be great over a long period of time in terms of dividend growth, and we'll look at that in a second as well. Now, the payout ratio is a nice, healthy 27.54%. If you're unfamiliar with the payout ratio, that is just the payment of the dividends and how much of a percentage of that is of their net income. So again, usually payout ratio under 50 to 60% is usually considered sustainable, and Costco's payout ratio here is a nice 27%. So they have ample room to keep paying their dividend and growing their dividend over time. So here we can see some snippets about their cash flow yield. Stock-based adjusted free cash flow yield is at about 2.14%, so not a huge cash flow yield. And like we said, their profit margin, their operating margin was 3.49%, and the profit margin, it's super slim, 2.55%. So a very razor thin profit margin on that merchandise that they sell. And we saw that when we looked at their statement of income. They have a lot of revenue, but then those merchandise costs are super, super high. Now we look at their balance sheet. We have cash about 13.7 billion, like we looked at on their balance sheet previously. The debt of about 6.5 billion, so a net cash position of 7.21 billion. Great to see in a company that I'm invested in. They are flush with cash and they are in a net cash position. A net cash position as opposed to being indebted or levered. So let's go and look at their revenue. So revenue, this is great. Like looking at this revenue chart, you might think it's a tech company or a extremely extremely growth focused or growth oriented company, which it is growth focused, but it's just astounding to me that this is like a grocery store, a warehouse. So they're growing revenue at a 8.64% per year growth rate over the past 10 years. And it is just amazing. So significant revenue growth over time. And then when we look at their earnings before interest, tax, and depreciation, otherwise known as EBITDA, it's growing at an even higher rate at about 10.82% per year over the past 10 years. So great growth in the revenue and EBITDA by Costco. Now, when it all comes down to net income, it's growing at an even higher rate, 13% per year over the past 10 years. Now, you might be able to see why it's one of my favorite holdings. So what we want to look at then is the earnings per share. Earnings per share are growing very, very high at about 12.94 or almost 13% per year over the past 10 years. So that is great. So earnings per share, or the earnings per our equity investment, is growing at a very, very high rate. One other metric to look at is free cash flow. So with Costco, they have a free cash flow. It is growing at 8.30% per year over the past 10 years. But as you can see, it is a little erratic. So what might be a better indicator is, again, the free cash flow per share. So the free cash flow you get per your equity investment. And again, it's up at 8% per year over the past 10 years. Now, what you might want to look at also is the effect of stock-based compensation. So like we saw, they issued about 600 million of stock-based compensation, and here you can see it's for the 2022 years about 724 million of stock-based compensation, but they were buying back a lot of that stock, netting to a very minimal effect of the stock-based compensation. So in my opinion, that's kind of a neutral point for me. I don't think they're really diluting you as a shareholder. If they are, it's very, very insignificant. And the easiest way to look at that would be to look at the shares outstanding. So this is the number of shares outstanding. As you can see here, they had large share issuances where they had to raise a bunch of money, but then they've slowly been either chipping away at the share count, so buying back those shares and counting them, or issuing them at very, very small amounts. And again, as you can see, over the past 10 years, it's barely moved the needle. So in my opinion, this is a very decent metric. Looking at the shares outstanding, Costco isn't really diluting you as a shareholder. They're not increasing your ownership in the company, but they're technically not diluting you, so I'm okay with that. So what we're going to look at next is the cash and debt. So as you can see here, cash is in the green, debt is in the red, and then those pesky capital leases here are shown as well. I would just ignore, in my opinion, this peach capital lease. Like I said, it's for an accounting classification, and I don't really look at it as debt. So as you can see, they are a cash-rich company. Cash definitely outweighs the debt here in red, so it's a great company, great balance sheet in my opinion. Now let's look at the dividends. So this dividend graph looks a little weird, but if you can see it's steadily increasing. It's because of the scale of the graph. So the dividend has been increasing at a very, very high rate. So it's growing at 12% per year over the past 10 years. So it's a high dividend growth company. So you can lock in low yields on cost and gain a lot of dividends over time. Now, what these bars are right here are special dividends. So Costco, what they do is they'll accumulate cash over time, and when they have like I said, a very disciplined capital allocation strategy, instead of trying to expand and expand and expand into so many warehouses a year, they'll accumulate this cash and then they'll reward their shareholders by issuing these special dividends, every 3 to 4 years. So Costco rewards shareholders when they have excess cash by giving them a large special dividend. So they're not only growing their normal dividends over time, they're also giving special dividends to reward shareholders. So that is great to see in a company that I am invested in. So that was the Costco overview. Now what we're going to do is talk about what I am going to be doing in terms of my Costco position. So Costco, it's like I said, is trading at a very expensive price to earnings ratio, around 39 and then 33 forward price to earnings ratio, and it's trading about $534. So when we look at my Costco position, it's going to go to my holdings. I'll zoom in, and again, if you're not familiar with my channel, this is my investment tracking spreadsheet. So Costco right here, I actually got in a average share of around average price per share around $427 per share, and it's up about 25%. So am I adding to Costco right now? No, I am not. I still think that this price, I think it's a great company. I still think it's a great company, but at around $534 per share, at a price and a price earnings of about 33 or 34, it's extremely highly valued in my opinion. Now again, Costco is one of those companies that will probably stay highly valued for a long time, and I might not be able to buy more shares at the same price that I bought into, but I just feel buying at this level for me is not the right move. It's I don't really have a margin of safety, and buying it's just too highly valued for me in my opinion. Now, if Costco were to dip under that 480, 470, or 460 dollar mark, that's probably when I'll try to be scaling in a bit, be adding to my position. Probably nothing super meaningful, maybe just another couple shares, but that's probably when I'll be scaling in, because when I was able to actually buy Costco at this $427 price, that was a rare opportunity in my opinion, because that's when Target a couple of quarters ago had released the results, and Target had horrible results, horrible financial results, and Costco's stock price after hours reacted in sympathy with Target's results. So basically what happened was Target had horrible results, their stock price fell, and then Costco did not release the results yet, but their stock price also fell because other investors might have been thinking that, oh, well, if Target had horrible results, other retailers or other grocers will have horrible results, and Costco's stock price fell, I think, like 12 or 15%. So I use that as an opportunity to scoop up some cheap shares. I wish I actually bought more shares, but I didn't have as much capital available to me at that time because it was invested into other equities. Now I've kind of learned my lesson. I've kept cash on the side, but again, that was how I got into Costco at $427. I still think it's a great company, and if you don't have a position, you should do your own analysis and see what would be a comfortable position for you, or a comfortable price for you to buy in. For me, it's probably around that $470, $460, $450 mark. That's probably when I'll be adding to my position. And if I don't see that, then I might not be able to add. But even if the quality of the business even gets better and the price falls, then I would look at maybe revising my target price. So that's just an example of what I would do in my Costco position, whether I would buy more or not. So currently, again, just summarizing, I'm not buying more right now, but I might in the future. And if the price comes down, I definitely will. So take that with a grain of salt, do with it what you will. So that was Costco. I hope you enjoyed the presentation. If you have any questions or comments, please leave them in the comment section below, and I will do my best to get back to you. And if you'd like to see other type of content, please let me know in the comments as well. I always read those comments, and I do my best to reply to them whenever I have a chance. Thank you for listening, and I hope you have a great day. Thanks. Bye. Please note, I am not a financial advisor by any means. My content is merely for entertainment purposes only. Please do your own due diligence when investing, as I am not liable for any investing decisions or investing losses you incur. Thank you again. Bye.